Plan on buying a home this year or in the future, here's the things you have to know or things you should do or keep in mind to get prepared or to be prepared when the time comes. So it really comes down to income, credit, and assets. Those are the three main things that are a big part of the picture that we're going to look at when you're trying to get pre-approved. So I'll start with credit. With credit, you typically need at least a 580 FICO score for FHA and about a 620 for conventional. Every lender's a little different, but that's typically the minimum. So if your credit scores are not that good right now, a couple things you could do to help improve your scores before the time comes are if your spouse or family members have good credit cards that really don't have any balances or any payments on them, it wouldn't be a bad idea to actually add you to those credit cards because you'll absorb that credit history and it'll help boost your scores. So getting added to a spouse or loved one's credit card can help you. If they have, if that credit card's like maxed out, has a high balance, has high payments, don't do it. That's probably not gonna help you so much. But if it's low balance, no payments really due on it, long history, good payments, then yeah, get added to it and that could help your scores. Keep your balances at 30% or less of the limits. If your cards are maxed out, that's definitely hurting your credit scores. That can impact your scores quite a bit. So work on paying down those balances to about 30% and leave them there. So paying down balances on it. Don't pay off any collections. If you have collections, I've talked to people that don't want to get pre-approved yet because they're saving up money to pay off collections. That's actually going to hurt your credit. So paying off a collection, let's say, the example I give is like breaking a bone, and over time it heals. It'll eventually get better. It may never be 100% like it was, but in due time it'll recover quite a bit. Well, when you pay off a collection, you're actually bringing a negative account. You're putting recent activity on a negative account, so it's like resetting that bone. It's like re-breaking it to set it right, where it's going to be painful at first, it's not going to feel good at first, and it's going to take a while to recover again. That's what's going to happen to your credit. So do not pay off any collections. Do not co-sign for anything, and do not open any new accounts. Don't buy a new car. If you want to buy a house, get the house first, and then you could go and finance the things you want. You have to put your priorities in order when it comes to buying a house. So credit, those are some tips on credit. Income, save all your pay stubs. So if you're planning on getting pre-approved, make sure from now till then you're getting your W-2s together, you're saving all your pay stubs. If you file your tax returns, save your tax returns. But with your job, don't make any job changes. Don't make any changes to how you're paid or where you're working from now to when you get pre-approved, or actually until you actually buy a house. In some cases, if you're going to change your job, if your salary now and your salary is just going up, then that should be fine, but make sure you run it by a professional first. If you're heavy bonus, commission, or overtime, then definitely do not make any changes before talking to a professional, because that can hinder you if you make a change and rely on that income to qualify before you're pre-approved. So don't make any changes with your job. Don't change how you're paid. Don't go 1099 and don't start a business unless you want to wait a couple years to be able to qualify. When you go from W-2 to 1099, you've just become self-employed essentially, and you have to have a 2-year history of self-employment with tax returns to qualify for a conventional FHA or VA mortgage. So do not change the way you're paid. Stay at your job, keep everything as is before you get pre-approved, or talk to somebody if you plan on making a change to find out how it'll impact you. And then last, assets. With assets, if you have money in a lot of different accounts right now, it wouldn't be a bad idea to start consolidating all that money into one account, because you want to make sure, we're going to look at 2 months of bank statements. And over those 2 months of bank statements, we're going to look at any large deposits, any transfers, and it's going to create a paper trail. We're going to start asking for proof of, where was that from? We want account statements from those other accounts that you transferred it from. It causes a whole spider web of paperwork. So ideally, if you could put all the money in one spot and have it be there for at least 2 to 3 months before you get pre-approved, that would make life way easier for you and the lender, and less stress and less headaches. So consolidate those funds and leave them there, and hopefully a couple months passes before you're pre-approved, and that'll be great. If you're trying to get pre-approved now and you got money all over the place, just leave it alone. Talk to your loan officer and we'll help guide you through exactly the best way to handle it from there. If you're getting gift money, if you're getting a gift from a relative or from somebody to help you buy your home, that's fine, but do not have them give you the money now. The best way to do it is you don't want to touch that money. You want that money to go straight to the escrow company when you find a house and you're closing on that house. So if you're getting gift funds, don't touch that money. Whoever's giving it to you, have them keep it for now. So that's gift funds. 401k. If you plan on borrowing from your 401k, there's a couple things you have to know. Make sure you call and find out how much you could borrow. A lot of times people think they're able to pull a certain amount out and then they find out they can't. So always do your due diligence with your 401k and find out how much can you pull out, and also find out how long that process will take, because if that process takes 3 to 4 weeks and you're trying to close your escrow in 21 days, that's going to cause a problem and some stress. So if you plan on using money from a 401k, find out, one, make sure you're eligible to pull it out. 2, make sure you can pull out the amount you're thinking you can. And then 3, find out how long that takes. So with assets, don't move money around unless it's going to be a few months until you're ready to get pre-approved. And in that case, consolidate it. Don't make large cash deposits or any large deposits outside of payroll. That's going to cause problems too. If you have any of these things I'm talking about that are going to happen, or you want to get some guidance on it, just let us know, or let your loan officer know, and we could walk you right through that. Anyways, those are some basic tips. There's a lot more to it and a lot of things you got to know. If you have any questions on it, let me know. Make sure you like and subscribe, and thank you for watching.